Hello, welcome. My name is Al-Amery. I'm a real estate investor and mentor. And the question of the week is how to buy real estate with no money down and bad credit. And this is a dilemma that a lot of real estate investors face nowadays. There are so many great deals out there to buy and invest in real estate, but financing options, especially the conventional financing option that you're accustomed to, are not a possibility for most investors. So in the next few minutes, I want to get into the core reasons and the main ways to invest in real estate with no money. The first thing we're going to talk about is about selling real estate. If you have no money or no credit, how can you make money as a seller of real estate? Well, the first niche and everybody is very familiar with is wholesaling flip. Basically, you secure a property, you write a contract, and then you wholesale, same day closing most of the time, and make money on selling this particular property or contract. And there's plenty of inventory out there, distressed property. There are short sales, REOs, buying notes, where you can actually buy the note and sell the note. It's not really the physical property, but just the note. And also foreclosure auction short sales flips, where basically if you're processing a short sale and for some reason this doesn't go through and the lender still schedules a foreclosure, you can go ahead and buy to the auction steps and sell it to your buyer. So you're still going to make profit, and most of the time it's actually even going to be more beneficial because the foreclosures will go for a lower starting bid amount than what you would have paid on a short sale. This is a very powerful technique being used on wholesaling nowadays. And also assigning contracts. You don't have to physically buy the property. You just secure a contract against this property and then you assign the contract to somebody else. And a lot of wholesalers love doing this. They like to buy contracts because they don't have to wait the whole process of you getting the property. They know very well you're flipping the property to them, but the process is so much faster, and then they take care of their financing and everything. So assign the contract for a fee anywhere from $2,500 to $10,000 is pretty common in wholesaling. Any conventional financing. Well, one of the most used techniques out there nowadays is subject to clause, which is basically a step up from a lease option to buy or sandwich lease. Basically, what you do is subject to, meaning that you buy the property, the title gets transferred to you as the investor, but the existing mortgage stays in place. So on the contract, it will say subject to existing mortgage staying in place on the property. And I know what you think. Some sellers are resistant in doing this because obviously they're going to lose control of the property but the mortgage is in their name. Therefore, what you might offer is a step up from a lease option to buy. So you might want to do a lease option to buy for at least 6 months to a year and then step it out to a subject to, where you actually physically get the title to the property and you keep making the mortgage payment. That way they see for a while as kind of a trial period to see that you're actually making the payments on this under this lease option on time, and then therefore they will feel more comfortable in transferring the title of the property. This subject to is very, very powerful nowadays, and a lot of sellers that do not want to do short sales and they do need to get away from a property, they will be very willing to transfer the interest of the property as long as you can getting the mortgage payments and keep them up. The same thing falls under the master lease. Master lease is basically a lease option, but for commercial properties. Again, you can work out the same technique. When you take over the property with a master lease, then step it up to a subject to, and you take over the building with no money or credit on your own, basically just by keeping up the mortgage payments. And I know what you think, that a lot of banks nowadays want a due on sale clause on transfers. Well, that's not really true, because honestly there's so much on the plate for the banks that they do not want to rock the boat. If you are making up the payments and if somebody pays the mortgage every month and they get their money, they're not really going to take the property or foreclose on the property or call it due and payable in 30 days. So this is a powerful technique. Keep it in mind out there. give all to you what financing techniques should you consider if you're buying real estate with no money and no credit. Transactional funding and hard money lenders, great if you're doing flips or wholesaling properties. Buying, rehab, or sell or refinance. So use transactional funds or hard money lender for these particular investment strategies. I do have a company, onedayfunding.com/50off, where they will give you 50% off the transaction fees. Private lenders, you need to research cash sales within the 6 months in the area of your choice. Find out which other investors have purchased properties for cash or have funded other property for other investors, and contact these. These are actually great private lenders. They might partner with you, or they might loan you the money to buy properties. Lenders, the only lenders I would consider out there in the market today are either portfolio or commercial lender. Portfolio lenders are smaller banks, regional banks, credit unions. They do have their own rules because they're funded by their own investors, so they're much more lenient. It's more of a relationship you establish with them more than just following certain sector rules like the larger banks have. And commercial lenders look at the property itself more than the investor. Therefore, again, they're going to look at you as a manager of the property, how you're going to present yourself, and what experience you have in real estate more than your own credit or income availability. JV partnership and hedge funds investors, this is another great niche. JV partnerships are actually joint venture partners which will look at properties that they would like to invest in, and they go based again on the income and the possibility of the property more than yours. The way they look at it is that, yes, they will fund the property, the title gets in your name, but worst case scenario, the property will revert back to them. So they're looking at a safe investment for them regardless of your credit or money. And the hedge funds investors, they have interest in certain type of properties. Now most of the days they are like medical office buildings, mobile home parks. They're looking at certain properties that have historically a low default rate, but they're very interested. And also they will buy big REO packages. If you are flipping and doing bulk REO trading, hedge funds investors is a great source for funding millions of dollars on REO packages. Master lease technique we talked about, which is a version for commercial property of lease options or owner financing, and is a step down from doing a subject to. Subject to is preferable, of course, because you do get the title to the property and you just keep making the mortgage payments. Self-directed IRA and insurance policies. Basically, with self-directed IRAs, it could be your IRA or somebody that you know, and it has to be transferred to the company, which is a trustee, and they will fund mortgage securities using a backup of your IRA account. Therefore, the interest rate is going to be really low. So you still keep the IRA in place, and then you just borrow against them. And again, it can be yours or somebody that you know. And the same thing with insurance policy. If you have an insurance policy for at least 5 to 6 years, most of them have a cash value that you can borrow against, and you can generate cash mortgage securities out of this cash liquidity of the insurance policy. But again, you don't have to touch these funds. The self-directed IRA and insurance policy do stay in place. You're just borrowing against them. And real estate syndication, this is one of my favorites, where you actually form a private lending group, and it's like your private bank. And basically, you are the syndicator. You're not using your money or your credit. You just basically are a consultant. You form this group of your own private lenders, and you use the money to wholesale, flip, or buy long term. And it's organized very easily. It's basically LLCs that you form for each property, and you are a member manager of each LLC, and then you raise money doing it that way. It's a very simple process, and actually I have a course about it. If you're ever interested, let me know. Now, if you're interested in more information about the 8 most profitable real estate niches, go to the website www.bestrealestateniches.com, and on the right side you can click and input your email address, and you'll receive a free report. Also, for limited time, I'm giving away a goal setting workbook to help you set your goals in investing in real estate, and it will give you a roadmap to make money really in the next few weeks. on how you're going to do that. That's part of the workbook. So make sure you visit the website, and you will find more information about no credit or money needed, the 8 most profitable real estate niches report. Why you spend thousands of dollars to find out what works is all in the report, and secrets to untapped real estate investments with low competition and high profit margins. So thank you for spending a few minutes with me. This hopefully gave you a lot of valuable information, and don't hesitate to comment and let me know if I can be of further help.